Hey guys, welcome to another market update from Charting Store. I'm Joe. It's Monday the 23rd of January and I will discuss the US markets which open in about an hour, and I also got the FTSE100 and the CAC40 for you because some users ask about these two as well. However, I would like to start off with the title of this update, that smart money is leaving the ship and the dumb retailers are starting to buy. And what you see here is a AA sentiment survey, and what catches your eye straight away that the latest reading became pretty equalized or pretty balanced again. It came out last Thursday and it's all back into that 31, 33 area. We came from a very bearish side from 47.6 and dropped all the way down to 33, and the long side actually picked up by 10%. And once we have a look back in history, always when the market was very bearish, it always occurred at the bottom and the market went up, and every time we went to that balanced reading of 33 that was here, the latest that was actually the all-time high at the beginning of last year. That was the highs end of March, and these here were the highs in August. These readings always marked the tops before we had a severe decline in the market. So what you see here is the so-called NAM, and it gives you what actually takes place in the portfolios of the asset manager or investing managers. And what we can say is that every time that mean average jumps above 60 or way above 60, it marked the tops in 2022 as well. So they behave pretty much the same as retailers. I mean, they also manage their accounts. And we had similar readings in August last year. We had a similar reading in December. And it's not on here, but we had a similar reading also back in March. And this is probably the most important chart for today's session. It's a smart money flow index from wallstreetcourier.com. At the bottom you see the smart money flow. At the top here you see the DowJones on a log scale. And I usually look for divergences, which mark the bottom at the October lows. Right here we had a lower low compared to the one we had in June, and smart money put in a higher low in October compared to the one in June. And we had the same thing now at the December tops. Here's the August high and here's the December high. It's a higher high, and smart money didn't follow that. It marked a lower high, so we had that negative divergence. And now at the end of last week we had that severe drop in such a short amount of time, and that could be a significant game changer if smart money is taking out their money that fast. To be honest, what I would like to see is another divergence. It's no guarantee that this is going to happen, but if we see a higher high at the Dow and a lower high at the smart money, and you get another negative divergence, that would be a very, very strong sell signal if it actually happens, or we are already in a complete turnaround already, and the market is already on its way to the downside. So let's continue with the other charts I prepared for you, and we stay with some divergences for the Dow. This is a so-called Dow theory. I guess most of you know about that. At the top you see the Dow Jones Industrials, at the bottom you see the Dow Jones Transportations, and you also compare the tops and the bottoms if they make a higher high or lower high. And once you compare the highs we had in August compared to the latest highs we made in December, the Dow Industrials, they made a higher high, and the transportations kept making lower highs. And so that divergence actually matched the smart money flow. And once you compare the December highs with the latest highs we made last week, the transportations actually made a higher high and the industrials, they didn't. So that was another sell signal for the Dow. I haven't prepared that many charts for the Dow. This is a 4-hour time frame. It's a futures indication, but based on the price levels of the cash market. I was triggering that rising bearish Wilbur wave wedge a couple of times last week. I think the first time some were here at 34, 200 or 300, and yeah, that thing gave you almost 1200 points to the downside. My last tweet was here when we hit that first target line. It hits a second one on Thursday, and yeah, it's starting to stabilize again in this 33 all the way up to 33,500 area, where we started to stabilize after that first drop from mid-December. I had a count for that this might be a potential one, and we got already wave 2 in at the beginning of last week, and this was already the start of wave 3. We have to say that the Dow was actually leading, so value stocks were actually leading that entire rally starting from mid-October. And now it seems like, because that drop here was much severe than the drop at Nasdaq or at the S&P 500. So it might be again that the Dow is leading again, but now in opposite direction. And as I said, or I mentioned that on Twitter also yesterday, we are looking for divergences. And what I would like to see is that probably the Nasdaq or the S&P, they take out these highs from last week, but the Dow does not do that. And that would be another sell signal. And as you can see, the Dow actually came up quite high compared to these December highs. It hit that 78.6 retracement at 34,400, and before they actually started that decline into the 33,000 area. So the last one for the Dow is my weekly cycle chart. You see in red a 33-week very consistent running cycle, which is subdivided into 3 little subcycles. And as you can see, the bottoms actually worked out quite well. The one in October, here the one in Feb, and this one was in June 2021. And as you can see, the last 2 big red ones, even there was quite an impulsive start, same here, they turned out to be bearish, which means that the low got undershot at some point. And here was a starting point in June, and it bottomed in Feb, which was also the starting point of the new one, and this one turned bearish because it undershot already that low with the second subcycle in May, and then it continued all the way into October. This one is by far the strongest, which started in October, but we experienced already a half cycle top in week 10 now, and we only had like a, I think it was we bottomed just before Christmas, so we had like a 6-7 day decline, which marked also that subcycle low over here, and now we are starting to rally, and it looks like that we are running into a left-hand translation, because we are not overtaking that high out of December. If that is the case, that whole thing could turn out to be bearish, and we undershoot these lows here into May. It might be a nice buying time in May, because I have a very similar indication for the DAX. You can have a look on that video I made yesterday. It's pretty much the same timing, and keep that RSI reading on the weekly inside. If we make another higher low here, that buying signal becomes even stronger. The one thing we have to keep in mind, this is a weekly chart now, and there are two types of death crosses. The one on the weekly is when the 50, which is the blue one, crosses the weekly 100 average, and the 50 is coming from above. That is a death cross sign, which is a sell signal for the weekly. If we have a look on the daily, it's when the 50 crosses the 200 moving average. Yeah, but sometimes these readings, they can be misleading because the daily is telling you exactly opposite. We can have a look on that. Let me just change to the daily. This is a 50. And this is a 200. And as you can see, the 50 actually crossed from below the 200 moving average. And this is actually called a golden cross. Since I put more weight on the weekly than the daily, yeah, don't get too confused by it. So yeah, that's about the Dow, and I continue with the S&P 500. This is a 1 hour time frame, future indication again, but based on cash price levels. I gave you that bearish wedge here, which worked out pretty well. It hit its target line already on, I think it was Wednesday night, and then Thursday we dropped into that cycle low. This is a 10-day cycle here, which marked the bottoms since the mid December quite well. And as you can see, we spotted that low here on last Thursdays pretty well, and now we are in that rising phase of that cycle here again. The big question is now, was that here the start of a bigger decline? And this is here still wave 2, and we haven't done or haven't completed wave 2. We hit, or we overshot that 61.8 retracement by a little bit. We might run a bit higher, and to be honest, I have the feeling that Nasdaq and the S&P 500 will take out these highs from last week, and the Dow is not doing that. And then we have that divergence at the top I'm looking for. Just to keep that in mind. Yeah, and on the cash chart, I got another cycle pattern for you. This is a 2 hour time frame. The time scale is a bit larger, and as I said, it's a cash chart this time. We are following that rising red bearish Wilbur wave wedge for quite a while now. There are still two target lines open, waiting at 36.25 and 34.19. And yeah, the S&P stopped basically at that red resistance we had here, which was the 76.4 from that high measured to that low. And once you have a look at that purple cycle bracket, it marked pretty well the October lows, and it marked that bottom over here. By the way, that first cycle was quite impulsive, and it topped out very, very late, and the pullback was very, very tiny. And this one here, well, we had that double bottom, and it topped out also quite late. Usually the rising phase goes over here, and at the halfway they start to turn in. And same thing actually happens now. We topped so far pretty much at the middle, but that doesn't mean we topped out already. We could run into another rising phase, which is this little subcycle over here. We could take out this red resistance zone and retest these highs. So that's a possibility, just to keep that in mind, because S&P and also the Nasdaq, they looked much more stable than the Dow. And it's most likely driven by the big four FANG stocks, Apple, Microsoft, Amazon, and Google, which look much, much better than the rest right now. Yeah, the next one we are going to have a look at is this daily chart, also cash levels, and I was twittering that last night as well. You see this potential symmetrical triangle, which needs another touch here on that upper trend line, which runs today at opening at 40.34. And my main idea is that we actually hit that, or we probably overshoot, do this fake breakout and come back to the downside. That pattern suggests that there is a quite large move coming up of 833 points, that the measured height from the top to the bottom. And that will give us around about like a 20% rise or decline. So I prefer actually a touch here first, a faker, before we turn around and decline into April or May. Well, let's say March 1st, and then we see what's going to happen. And the last one I got for you is the weekly. And again, we have that death cross, the same what we have at the Dow Jones, where the 50 is crossing the 100 moving average from above. And similar reading also concerning the weeks that we topped out of this half primary cycle. In week 9 we declined into week 10, and now week 14 is done, or was done last week, and today week 15 starts. And the S&P is hanging at that trend line coming from the all-time high. You couldn't really get above there. And there's also that 50-week moving average he can't really get or break since April last year. And also have a look that we only came up to the 38.2, or somewhere between the 38.2 and 50% retracement. The Dow is somewhere between the 61 and 76, and DAX actually hit that 76.4 at the end of last week. So the S&P500 and the Nasdaq also, they are lagging behind by quite a lot. Yeah, the last one for the US markets is the Nasdaq. I only got like daily charts for you, but they're all quite interesting. And also we're gonna have a look at the VXN later on. I was twittering that quite a lot the last couple of weeks. You see a potential shoulder head shoulder pattern. It's a potential one. It's not activated yet because we are missing that fourth touch here on that neckline. And once it comes down here, if it comes down there, we need to adjust that neckline here a little bit as well. There was this one guy on Twitter who was responding to one of my posts, and he was actually saying, well, these shoulder head shoulder patterns, they like to occur at the tops, not at the bottoms. And he's actually quite right on that. I experienced that a lot as well. Whenever we had 4 touches at the bottom, it was actually a turning point. And not to the downside, it was actually to the upside. I have to say, yes, I agree with that, but this time it might be a bit different because we have such high readings on several indicators, and we only retraced 38.2%, and that is measured from the August highs, which was our last major top, to that low here we made in October. And also we're gonna have a look at the VXN later on. It dropped by a lot already, and we're only up here, and the VXN is back into his 20s and lower 20s, which is never really a good sign. And also my cycles, they suggest to run a bit lower. This cycle here actually worked out quite well. It marked several bottoms in the past. This one here turned out to be bearish because we undershot that low over here. This one was the first bullish one again after quite a while, and then the next one turned out to be bearish again. And for this one here, we have to wait if this one is turning out to be a bullish or bearish one. This one here suggests a low at the 9th of Feb. Yeah, to keep that in mind, considering timing. Yeah, the next chart I'm going to show you is quite old. I'm following that expanding diagonal for quite a while. Long story short, it consists out of zigzags and ABCs, and there's 3 major legs to the downside. This one here is the first, this one here is the second, and in my understanding we are still in the 3rd leg down, which is wave 5. And the minimum requirement is that the last leg in an expanding diagonal is the longest. In other words, this leg 3 was the longest so far, and leg 5 has to be longer than this one here, and which means the minimum target for this one, if the last leg equalize or the same length as wave 3, the minimum target is 9,492, which is down here, or we even drop further down. Just to keep that in mind, that thing is still on it. As you can see, it's the same what the S&P 500 is doing as well. There's the same pattern, and Nasdaq is hanging at these 2 trend lines, basically at this one here. He couldn't really get over there in August, and the same in mid-December, and now he's hanging there again. And this chart actually leads to the next one. It's also a daily chart, and this is just the idea for now that this is turning out to be a very large bullish Wolver wave wedge pattern that we could probably run a bit higher here, but if we start dropping here, we are missing a 3rd touch on that lower trend line, and then we actually have a large ABC corrective pattern before we might start a rally into summer. And the last one I got for you is a weekly. It's a cycle chart again, and here you actually can see how much Nasdaq is lagging behind, especially the value stocks in the Dow Jones. Here's that major 61.8 retracement measured from the all-time high to the low, and we are not even at the 38.2, not even close. And as you can see, we probably run early into a half cycle, which also matches the half cycle of this primary one, which is on, this is that green one, which is here on that early side. And this is probably just a second half cycle. And as I said before, the odds are for the Nasdaq the best that we take probably even out these December highs at 12,166. And again, if the Dow is not doing that, but Nasdaq is doing so, it will be a sell signal. And have that 30-week moving average inside. It used to be like a super strong resistance the entire 2022. And yeah, we are running very close to it again. It runs at 11,805 for this week. So yeah, have that in mind as well. And the last one is the volatility, the VXN. So it's the VIX for the Nasdaq. And what I put in here is that this declining or falling Wolver wave wedge pattern here in blue. And we are testing already the lows out of August from last year, and we are not even anywhere close to these highs in the index. So as I said before, volatility is already so low. in my understanding, we probably drop here a bit further, and that would actually fit to that this rally is continuing into this week, and volatility keeps dropping, is reconfirming that trend line, and then we pop up probably at the end of the month or at the beginning of Feb. Yeah, that's about the US markets, and we're going to continue with the FTSE. Yeah, this is just a very basic chart. I just put it in a count and one pattern. It's a weekly chart here, by the way. There's, in my understanding, a very clean 1, 2, 3, 4, and we are in the last wave to the upside now. And the 100% duplication of wave 1 is at 8,438, and the 61.8 of wave 3 is 8,063. We made already a new high, so wave 5 could end at any time. The all-time highs out of, I think they were in 2018, they're very close. We took out already the highs from January. So the British are actually going nuts and are leading and performing even our German DAX out with that latest rally we're experiencing. And there's like another nice pattern, a so-called descending broadening wedge, which has its minimum target, that's its statistical target at 8,281, and the 100% move. So that 100% measured move is between that high and that low is at 8,422, which match perfectly that 100% target of that count. But as I said, it could be done anytime. These last waves to the upside, and once we zoom in, oh no, it's different than DAX. Forget about that. So yeah, there is a chance that we run up here, but I wouldn't bet on it, to be honest. I'm not familiar with the FTSE. I haven't traded this one before, and it's the first time I look at it. So whoever was asking for that, I hope I help you out with that. Yeah, and the last one, there was also someone on Twitter who asked about the CAC40 out of France. Also the first time I have a look at it, and I just kept it very simple as well. It's a weekly chart. I put a basic count on this one because the structure also looks very clean, that this could be a 1, 2, 3, 4, 5, and the 100% move would be below wave 3, which is at 7,196, and the 61.8 of wave 3 is at 7,403. So this is actually a major resistance zone also, because we have that all-time high here. And I'm gonna switch into the daily in a bit, but have a look at these cycles here also. They run pretty well. It's a 33-week cycle, and which marked the bottoms quite well. Not precisely, we were like off by 3 weeks couple of times. We marked, by the way, the Corona low very accurately. And we are already halfway through. So of course we could extend on into the second half. But keep in mind, does this one here suggest also a low when the Nasdaq, the Dow, the DAX are all suggesting a bottom sometime between mid-May until mid-June. Just to keep that in mind. And once I zoom in into the daily chart, that structure is basically the same we have at DAX. We have a 1, 2, 3, 4, and we are now in the last wave to the upside running 5. And this one here is also the same structure as DAX. It's a 1, 2, 3, 4. And this is probably the start of wave 5, or we go into an ABC to the downside, and there is the last leg coming. Which would mean, in the bigger picture, in the weekly, we are not finishing off wave 5, and it will be a shrunk wave 5, and that's it. So we're not making new all-time highs, or we stop at the all-time highs. 2 options. Yeah, that's about it. I hope you enjoyed this one. It went a bit longer. We got now 30 minutes. And yeah, I wish you all the best, and give me a thumb up and leave me a comment if you want to see more. Thanks, and enjoy watching.